What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are just kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Madeline Yao. How are you doing today, Madeline?
I'm doing awesome. Thank you for having me.
Awesome. And I got to tell you, though, I'm really excited today because my very favorite audience member has joined us today. And why is my favorite audience member here today? It's because this is a chance encounter where I interview commercial real estate syndicators. That means buyers, sellers, investors, and all that kind of stuff. Now, why would I want to do that? Well, part of it is because if you want to cooperate with people and have access to private deals, you need a documented prior substantive relationship to show the SEC when they end up auditing you for the different syndications you're doing. But before we get too excited with any of that kind of stuff, Madeline, do you want to say a thing or two before we get into the details of your background?
I actually help operators increase occupancy and revenue and been syndicating since 2019. And for the past 8 months, we've closed like 9 deals. So it's exciting. I'm excited to meet more people and, get on your show. So thank you for having me.
Awesome. Beautiful. So the first section that we go through is the distinct motivations. Before I hit that, though, I got to say, but wait, check your 8. And Madeline, I don't know if you can look through the camera and at the 8 o'clock, it's the 5 for the audience, but under there might be this hideous red button that says subscribe on it, and they should really do something. Can you? No, it's just a stupid joke I always do.
It's right there. Just go for it. Go for it, guys.
Exactly. But I've met a whole whack of commercial real estate syndicators, and everybody has their version of why they are doing it. I need to know this just because it's a lot of work doing a close on a commercial property, and I got to know what's really motivating this person to continue. So I've been able to separate them into 5 different distinct categories. The first one is preservation of purchasing power. And what that means is if somebody already owns a portfolio of assets and the way they make ends meet is from the profits that come from ownership, then the only time they're going to make a new acquisition is when inflation is wearing away at the purchasing power of their cash, or if they can buy at a steep discount, like when there's an asset crash. But that is not what I'm up to. What I'm up to is trading time directly for wealth. I've got a background in technology, specifically CRMs. So that's emailing a whole whack of people and being able to segment and do all the online funnels and all that kind of stuff. But the problem with having a high wage or a high salary because of a tech job or whatever, health engineering, whatever it is, you are paying more in tax than anybody else. So it hit me, why don't I pivot into something where I'm getting rewarded in the form of deployed capital, aka equity? And that's what I'm up to. But that's not everybody. A lot of people, they come into this industry because they hear there's lots of money involved, and what they're really trying to do is take over their schedule. Maybe that means they want to fast track their retirement, or maybe it just means they want to work fewer months per year or fewer weeks per month or fewer hours per week. But that's not really what I'm up to either. But some people, they are not looking to tone down the amount of work they do. They are just plain ambitious. They want to buy their entire hometown. They want to make sure that their great grandchildren never have to hold a day job. And that's the kind of generational wealth that they're looking to build. And that's their motivation. But the last group of the 5, they also are going to be similarly motivated, but they've picked a sector of society, or maybe it's animals, maybe it's the environment, who knows what it is, but they've realized they need to have a significant financial backing if they're going to make a huge impact. And that's why they're making these acquisitions. So Madeline, I know that was pretty fast, but those 5 different motivations, what jumped out at you? What combination of those describes you best?
Probably transferring time for wealth. I don't want to live life just looking at the clock. I want to be able to just work and do things as I feel, every day I wake up. So definitely, yeah. Don't want to be attached to the clock at all.
I love it. I love it. Yeah, life is definitely too short for that. But let's get on to the
Yep.
next question, which is the tolerance for risk assessment. So a lot of people get into this industry because, again, they hear there's lots of money involved, but you're dealing with nature. These buildings exist on soil. So that means like the variety of risks that are involved, like there's a lot. And I have to know that whoever I'm working with, in this case, my guest, that they recognize that. So I've got this neat fill in the blanks question here for you, which is there are many popular investment asset classes, but I think blank is too risky. Your answer can be real estate or non-real estate, like anything goes. But Madeline, what's too risky for you?
Stocks at the moment.
And yeah, I love that answer all the time because like all these companies, they have their own PR departments, and their whole job is to spin what's going on into something that's palatable for people. And when you're investing on Main Street, that's not the case. So I always love that answer. But don't forget to subscribe. I always forget that this thing pops up. It just kills me. Oh man. So yeah, it's a good sub right there. Anyway, but back to commercial real estate. Every single episode of Dan Does Deals Chance Encounters, I pull out the Dan Does Deals commercial competency cube, and you can
Oh,
get your
that's
own
cool.
copy for free from dandoesdeals.com. I don't even ask for your email address, and from a marketing perspective, that is the worst idea you can possibly do, is give out your freebie and not even ask for contact information. But I do it because I want there to be no barriers for you to visit and download and print it out and then practice explaining these different sides. Because if you're going to be in commercial real estate, your ability to effectively
Cool.
communicate is going to make the biggest differences. And in every episode, I go through all 6 sides. It just takes 2 minutes, and let's get started. So this way you'll know exactly
That's
how my
awesome.
guest fits in. So a repositioner is a person who's in acquisitions. They're looking at a bunch of different properties. They're doing a bunch of different paperwork. What are they doing with that paperwork, you ask? Well, the first thing is a fancy word. It's underwriting the deal. That means they're doing the math. They're figuring out, is this property even making the amount of money that the seller or broker claims it is? Because who knows? But the reason I call these guys repositioners, a lot of people just call these guys investors. I call them repositioners because they have to figure out how are they going to change how the property is run to find more upside. And the first place they're going to look, every single repositioner has to have a vast network of financiers and lenders. And the reason for that is because if you can get a more advantageous loan, that goes straight to the bottom line as far as profit goes. Your debt service is reduced, and so that means the NOI goes up. But let's just say that the financiers, the people who only deal with paper and money, in other words, contracts and whatnot, let's assume that that's not on the table and they can just get a standard bank loan. So the repositioner, the next place they're going to look is operations. They're going to stop those Benjamins from going down those toilets. But of course, there's a lot
Yes.
more to operations than just making sure that you unclog toilets and collect rents and mow lawns. One of them, which is one of my backgrounds, one of my fortes, is marketing comes into play. Because if there's a vacancy rate problem, even on these bigger properties where you're outsourcing the operations to a third party, you might run into a situation where the vacancy rate is too high and they can't fix it. So somebody like me comes in, and between the automations and the marketing content and whatnot, that is what I would contribute for an asset management. But operations, there isn't always that much room. Commercial real estate's very competitive. So frequently the repositioner needs to get a contractor team involved to do a value add or renovations, because that way the next residents will be happy to pay more in rent than the previous ones because it's a nicer place. But that's no guarantee, because you can spend lots of money on contractors without an ROI. And if you are like me, see, I'm from the internet. That means you need a local. You need boots on the ground. You need somebody who can be there in an hour or two, because that's not going to be me. I'd still be stuck at an airport in an hour or two. But these locals will pay attention to The contractors making sure they're finishing on schedule, they're not cutting any corners, and making sure that the operations are legitimately doing their job. But when the repositioner has this team assembled and they've got the property in hand, they turn around to the financiers and say, hey, I got this property. It's worth tens of millions of dollars. It's like 350 units or something. You don't happen to have, say, tens of millions of dollars you want to lend us, do you? Well, the other question the financier is going to have is, who is your sponsor? Who's the person in the fold who already owns a similar asset? Because if you want to be eligible for a commercial loan, even if you and your friends are fairly well off and you want to take over an apartment complex, they're not going to give you a commercial loan unless somebody already owns a similar asset. Now, on top of that, you also need a certain amount of liquidity. And among the ownership team, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So, Madeline, as far as your core competencies go, I believe you're involved in deal finding, which is a repositioner piece. But how would you describe where you are most likely to fit into your next deal?
Asset management for sure. Just helping those vacancies and helping the property manager increase occupancy and revenue for sure.
All right, excellent, excellent. So then my next question has to do with ideal property. I know that you're down in Florida, but when investors or syndicators are asking each other about a buy box or ideal property, they're really asking about three things. First one's geography. Where is it? Which state? Which counties? Possibly even which neighborhood. Okay, that's all going to matter. The second one, it has to do with the size. We talk about multifamily for the most part on this show. So unit count is the way that we decide the size. And the reason why it's important is because you're going to have different groups taking over 15 unit apartment complexes compared to the ones taking over 150, 350 unit apartment complexes. In other types of commercial real estate, it might be square footage like industrial or something like that, but the size matters. The third one, though, is class, and I separate that into two separate terms. The first one is condition. So that has to do with how old is the building? How beat up is the building? Is it brand new? Is it no frills? Is it filled with amenities, or is it basically pretty bare bones? That's the condition. That's the first meaning of class. The second meaning of class I call area, and what that has to do with, it's what are the school districts like where the property is located? What's the crime rate like where the property is located? How much traffic goes by that area? In other words, what's the demand? And both of those versions of class are rated with the same system as in grade school, where you got A plus at the top, and then A, and then A minus, and B plus, and so on. So Madeline, as far as you and your team goes, what's easier to say yes to and more difficult to say no to?
I would say the location. You know,
So it's
very desirable.
Florida?
In Florida, yeah. So Sunbelt, basically, like Florida, Orlando, Florida, North Carolina, Texas, and Georgia.
Georgia? Okay, great. And then as far as unit counts goes, like what kind of size is in the sweet spot?
Right now, we're looking at 60 and up for sure, because we have like 63 in Naples, we have a 60 in Georgia, Atlanta, Georgia. So, and then we have like a few hundred. So yeah, for sure, 60 and up.
Okay, and then as far as class goes, like, do you like value adds, or do you like stabilized deals? Like, what kind of like A, B, C? What kind of properties do you guys prefer?
So we're looking at value add, maybe C, but in a B area kind of thing. So just so we can stabilize it.
Okay, beautiful. And I don't recall if you're a broker or not. Like something like no. Okay, cool. So then the next question I have for you, it has to do with who you're disproportionately well suited to help. And me personally, because I'm the internet guy, I do marketing, content, and automation. So for me, I'm always on the lookout for more sponsor KPs, just because they've got the foundations already baked in for a guy like me to make a really big difference. The other one, of course, is the locals, because that's the opposite of being the internet guy. So those are the people who I'm mostly looking out for. And you can reach out to me on LinkedIn to schedule this appointment. But Madeline, I don't know if you have any 506B raises going on right now, but if you do, you're not allowed to entice investors. I don't know if you have a donut on your table or something, but don't wave it in front of the camera. That would be very enticing.
Actually do.
Yeah, yeah,
I do have a donut.
right,
And I'm
exactly.
gonna eat it after this.
Right, exactly. And it's okay to say you want to talk to beginners. A lot of people, that's a popular answer. But who are you looking to help? Who are you best suited to help in this industry?
So I do not have a 506B at the moment, but I am, increasing that group. So the people that I'm actually enticing at the moment are people locally, my community. I do live in a medical city area, so that's pretty much who I'm enticing at the moment. Doctors, lawyers, business owners that are literally in my area and that I can kind of build that relationship with, for sure.
All right, excellent. And then as far as how to reach out, me, I got this really distinct last name, so I'm easy to find, and LinkedIn is the best platform to do that on. But if you scan this QR code with your phone, that takes you to the it takes you to the FAQs page of 506BME to explain all the things that the service does to document your investor relationship, so that way, if the SEC audits you, you've got that all baked in and you're all good. But Madeline, as far as you go, is there a social media platform that's best? Is there like phone, email, website? What are the best ways to reach out?
Yeah, for sure. So LinkedIn, of course, Madeline Yao or Yao Madeline, because there is another Madeline Yao. So swap it, Yao, YAU.MADELINE. And then you guys can text me at 321-747-5733. So that's 321-747-5733. And just say, hi, I met you at Dan's show. And we can start the conversation there for sure.
All right, beautiful. Yeah, you can say that you saw this chance encounter. But the last thing I have, it's actually not for you, Madeline, it's for you in the audience. It's a public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs, maybe like migraine-like symptoms, it's probably the hideous subscribe button that's right there. It's you'll know because it's red and you'll be like, okay. And if you click on it, it'll turn gray and all that will stop. And of course, I have to mention it because if enough people click on it, that means that YouTube might actually start paying for these videos instead of me. And that's kind of that. I think that would be amazing. As far as the trade-offs to you, it means that my videos might show up on your list of suggestions, but you can go ahead and ignore those suggestions. I just appreciate the fact that you spent this time with me. Just like Madeline, I appreciate you joining me today. This has been great.
Likewise, yeah, for sure.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.